Seems like we got a lot of people eager and ready to go. So first, I want to thank everyone for joining us today. We're going to talk about our team, our HabPro team, the HabPro products, and maybe get into about going through NSM itself and other programs that you may have interest in hearing about on the call. Before I go any further, let me introduce myself. My name is Joe Mossbrook, and I am the director of the HabPro program that was launched back in 2018. We continue to grow, and this is really our fourth full year writing in the habitational space. So we're super excited, growing the book to close to 70 million, and we're eager to get that even higher. So let's just go over today's agenda. But before we kick this off, let's do a little bit of housekeeping items. I'd like to really just to cover that the first 50 agents that logged on and joined today's webinar, you guys will be receiving a $30 Amazon gift card. So thank you for joining. You will be hearing from Liz from our marketing team this week. So congrats to you and everybody that's on the call. So let's get started. This webinar is being recorded, and we will send out the video and the slides to everyone on the call later this week. Please keep yourself muted if you can during the presentation, as we have designated time at the end to go over Q&A. Those questions should be entered into the question section, and Todd will read them at the end. We'll try to cover as much as we can quickly so that we can get to those Q&A session and that make a meaningful session today. So, okay, let's run through today's agenda. HabPro NSM intro. Let's get to meet some of the HabPro staff as we value hiring good property partners, experts on the team, and quickly introduce you to some of the other specialty programs and classes to understand what NSM is and what we're made of. We're going to cover some of the market insights, the challenges each of us have as we navigate through the changes thrown at us as the carrier's appetite shifts, the client demands or needs become harder to meet. You know what we're all facing today. Our appetite, what is the best way to get a quote? We're going to talk about what's just ultimately how we're going to reach and win a binder. As you know, our guidelines from the HabPro perspective has shifted and changed a little bit, and we'd like to go over that and how those narrowing guidelines will impact some of the changes or appetite we used to have and how it's shifted a little bit as we move forward. We're also helping retail agents win. You'll be hearing a lot about that. Recently, we have had a push to onboard more retail partners and appoint more retail agents around the country. We have a very limited distribution of agents, a network of partners that we really are proud that we've built, and we're really looking forward to adding additional ones. So you'll hear more about how we can help you grow your book of business, as well as working together and really for our sessions like today to build stronger relationships with our current partners and to identify new opportunities, new partnerships that are on the call today, and how you can take advantage and become a partner and a member of our exclusive network of agents. We want to save time to review and discuss your individual questions, so don't forget to put them into the question section of this presentation. So without further ado, here are some speakers for today's webinar and members of our leadership team. And don't worry, you're not going to be seeing my face the whole time for the whole hour. So let me first by starting for our speakers today. We are lucky to have several habitational experts from the Hab team here to share their insights today. Well, the first one, as you can see, is me. We have Todd Van Gieri, underwriting manager. Todd, do you want to wave?
Hi, everyone.
Awesome. That's Todd. Todd is our underwriting manager. He wears many hats, but he's mainly keeps me in line so I don't commit to too many things I can't deliver on. I always joke with that. But Todd has been here with me from the beginning in 2018, and he has worked with me for over 15 years. And with me, he's been with me on the carrier side as we launched different opportunities on the binding authority over the years. He maintains the consistency of our underwriting acceptability and oversees all of our underwriting personnel. So Todd will be going through his experiences and talking about different items on today's presentation. And then we have Davis Hawley. Davis, please say hello.
Hello, everyone.
Awesome. Thank you, Davis. Davis is our senior production underwriter, team leader. Davis is one of our polished person on the group. So you'll hear some really good insights from him and what he's added, the value he's added to our team, as well as Reed. We have Reed on the call today. So Reed, please say hello.
Hey, everyone. Thanks for joining.
Yeah, Reed is an experienced production person lead with us. He does a great job keeping production growing, keeping agents happy. He's been with us for over 2 years, and he's really worked real hard building out our retail agency partners. So let's just dig right in. Let's get into the different aspects of the HabPro. So what is HabPro? You know, I look at it and say HabPro is the leading program facilitator. Where specializing in commercial real estate property, apartments, condos, multifamily homes. Was really writing in the specialty insurance market in the non-admitted space using Arch specialty as our paper. But before I take a deep dive into the appetite of HabPro, I'd like to always put a little plug into some of the NSM products and also who is NSM. So NSM has been around for over 32 years, and we pride ourselves in great relationships. We serve over 1 million clients and 15,000 agents and brokers. So pretty sizable organization. There are 14 office locations in the US and the UK, over 1,000 employees. I promise they won't all be speaking today. Here are some of the programs like the collector car, the ATP, ensuring behavioral health, risks, treatment centers, all comp you'll see is listed there, workers' comp solution for many classes of business. And they focus on some equine business as well as many general comp classes. You can see we have Embrace. Embrace is a pet insurance, and they're a leading market to cover those domestic animals. Sports and wellness is listed here, covering those local gyms and fitness centers. I would suggest you go to nsminc.com. That's nsminc.com to learn more about the programs that are listed. More details, information there. Again, if you get a chance and you want access to different programs within NSM, here's a great opportunity to take a look at maybe some business that comes across your desk, and maybe we can solve some additional solutions for you outside of the HabPro. Okay, enough of the plug for our programs. Let's talk about HabPro. So the mission of HabPro is really to provide the best-in-class insurance solutions for non-admitted apartment condos risks in the small to middle market space. I always like to say either on Main or one-off Main Street type business. We launched in 2018. We write risk all day, every day. It's who we are. So you get a look right there. I look at this as you have binding authority markets, you have brokerage markets. We like to play in the underserved space. We call it middle market business, not the large SOVs or larger limit, not the small bonding authority, but that space that we consider underserved, where our average premium is $25,000. Our average account looks like 1 to 5 locations with 1 to 5 buildings at each location. 90% of our business is property. So we can offer a package solution. We can offer a monoline property solution. We just don't entertain GL only around the country. And the only area we don't write in is Alaska, Hawaii, Louisiana, Florida. So if you're looking for a Florida solution, I'm sorry, that's not going to be able to, to be part of our presentation. And some other areas, 5 boroughs of New York has always been an area that our carrier and ourselves, we kind of stay away from. So read, if you can read the slides, we are committed, to servicing all the agents, helping agents get appointed, meet their business goals. We are very strategic about who we partner with around the country. We focus on agencies that are experts in the business and value the underwriting process. So if we can move to the next slide. So here's some of the things to know about HabPro. We work with the A-rated national carriers. Our form is pretty broad. I always like to refer to it as like a customized Bob, where it has we have a property extension form. So if you ever compete against us out there, or you've heard about our product, it offers a lot of coverage. And that was really by design. We try to attract the best-in-class business around the country. So we're targeting a lot of business that falls outside of the admitted market, where they're narrowing in today's environment. They're shedding some business. What we like to do is try to capture that business that's fallen outside of that admitted market, as well as some, we call that A and B type of business. And there are the C kind of business that's in the E&S market, and always trying to find solutions. So we do offer a broad product. That's one of our added advantage with 20 or so. I'll talk a little bit about that later on, but our form is very robust. It has many supplement ancillary type of coverages that are really specialized for the habitational and condo owner. So we're creative in our solutions. We look for opportunities and figure out a way to carve out if it's only the property we can write, or maybe there's some reason to put a higher deductible. Things that are creative out there with form, being non-admitted. Sometimes rate on some accounts is needed to be pushed a little heavier, but that's what we will try to bring a lot of different things to the space. Working with the not only the best in class agents like yourself, but also having the ability to work with our carrier from a referral basis. We also have an in-house claims team. There are such huge benefits to us to try to manage and mitigate loss. So that at times we sit and we discuss with them some areas that are, let's call them hot items that we've been seeing, a loss lead. We sit down and figure out, is it a given state? Is it a given type of a risk, or is it just bad luck? But having those in-house specialists, claim specialists, really helps us work and manage profitability. And then the dedicated underwriters. We assign an underwriter to each partnership, a specific underwriter to each partnership. So what we do want it to do is make sure you build those relationships and that you have a go-to person. So when an account gets cleared, it gets sent to you as an acknowledgement. If the account is clear, then it also states on that form who your underwriter is. So we give you a specific underwriter to work with, as well as a backup in case there's a need for that as well. So we feel like we have a really good system and process to quote, bind, and ultimately issue policies. So next slide. So this is us. This is our team. We're really proud of the team we built. As you can see, some of the folks that are on the call and going to be handling this are here. We think everybody has strengths, right? So we find those strengths of each individual, and we look at them. Are they hunters and looking for new business? Do they have the ability to form meaningful relationships? So we kind of put them on a new business team, and then we have others that are more internal, working on renewal accounts, and they have helped us in a way to keep our retentions high. So separating the two, being able to service each agent properly. Our turnaround times are very important to us. So as you can see, we have enough folks here to satisfy your needs. And we should see here. You probably will be. A few of the folks here have joined us and are from carriers, and that's important to us. We think that they understand the duty that's necessary to provide profitability, as well as as they working with the carrier, being able to produce meaningful, sizable accounts, production goals, and ultimately satisfying the needs of our clients. I want to go to the next. So we're really looking at market insight. To me is that we have a lot of strong form, which we talked about. The competitive coverage. We think we talked about our turnaround time, top notch ability to meet your needs from transactional perspective. And at the end of the day, the market insights is really the issues that we're having in the space. We have property capacity being scarce, carriers are exiting the market, we have tighter guidelines, and we're here to really go through what is the best way to win accounts. And we know that the market has changed, and we know that there's tighter guidelines and parameters that we're faced with day in and day out. So we want to then try to get to, so that the hard market and the carriers are shedding the business, and we're here to help. These are challenging times. The market conditions that are impacting everyone. Our appetite has narrowed, but we are seeing the impact of that hard market and carrier consolidation, certainly. But at HabPro, we're adapting to these changes and doing our best to seize the opportunity. So let us know if you have any issues, you have any problems, and we're here to really dive into our appetite, show you what we can do, and get real excited about the opportunities going forward in the 2023 year. So let me turn it over to Todd Van Gieri, underwriting manager, to discuss some specific appetite information. Todd?
Great. Again, I'm Todd Van Gieri. I'm the underwriting manager at HabPro. Joe kind of gave the introduction, but I've been doing Hab business for 20 plus years and been with Joe for a long time, and help work with the team here to not only write business, but also develop all the underwriting consistencies that we do amongst the team. So that way, it doesn't matter if you're looking at a California risk, a Connecticut risk, a Georgia risk, or it doesn't matter what underwriter you're looking at. We're trying to deliver the most consistent product that we can across the board. So that's kind of my role. Again, I know a lot of people are on their call on this call, taking an hour out of their time. So I want to thank you for being on the call with us today. It means a lot to us. We're really looking forward to continuing to grow the book with everybody. Before I get into the appetite, I did want to do one thing real quick. I just want to run through our submission process. You won't see it on the slide, but we have a dedicated email address. It's basically habpro@nsminc.com. And submissions that get sent there, they go right into our clearance system every night, and then the next morning when we're get back to the office, everything's that came in the day before or the weekend before that weekend, because we all love to work on the weekends too. Everything's there ready to go. Everything gets assigned to an underwriter, as Joe mentioned. you'll get a clearance email either saying, that it's assigned to an underwriter, we're good to go. And unfortunately, in today's world with everything bounced around, sometimes we do see duplicate submissions. So we'll let you know if we already got it received from another agent as well. After we do get it in, we do go through, in a pretty extensive underwriting process to make sure that we know, what the risk is. So we'll scan, the applications, the SOVs, whatever you send us, one, to make sure the risk is something that generally fits in what we do, as a program, limits fit where it fits, make sure it's not in a state that we don't write in, things like that. Make sure it doesn't, have some crazy $2 million loss on it that we can never entertain. So something we can quickly, say, yes, move forward. No, let's get a quick decline out to everybody. Then after that, we kind of go through a more extensive process that we kind of call triaging. It's looking at Google reviews, it's looking at Google pictures, stuff like that to get an idea, the visual idea of what the account looks like. Then on top of that, we run stuff like crime reports to see, what's going on in the area or the risk itself. We run wildfire reports, the big deal out west, the Midwest area, especially anymore, because these can be catastrophic. So we generally try not to write in areas that, have a giant wildfire exposure. We're looking at wind and hail mapping to see where we need deductibles, things like that on risk. We're doing ITV analysis on the buildings to make sure they're adequately insured. That's a big deal to us and our carrier partner, that we don't want, grossly undervalued buildings on the books. So that this leads to issues, especially on more partial losses where you're paying out huge values on small claims because the buildings weren't adequately insured. Because we do a lot on agreed value as well, in there, because it seems to be like the go-to thing for banks these days. Are not very keen on co-insurance. While we can do it, agreed value is key. So again, ITV is extremely important. And again, just for you guys writing that down, if you didn't hear me the first time, the submission clearance email is HabPro at nsminc.com. And as you also learn and develop to know who your agents are, I always suggest everybody to CC your underwriter as well. So that way, they can see what's coming in. If you got a hot ticket, it won't just be another, submission in a list that they get the next morning. Because we see business that comes in, they might need it tomorrow, they might need it in 2-3 months from now. So you can imagine the list is quite long. It can be thousands of submissions long that we, get through every month, and then you have multiple months in there. So if you have a hot ticket, hot account, it's always good to CC an underwriter that it was assigned to when you get that clearance, or if through the clearance emails where to go. So jumping into eligible classes. So Joe touched a little bit. We do apartments, condos, multifamily, but it's predominantly non-coastal. So what does that really mean? So unlike Champ, who you might have seen early on in there, who does, a strictly predominantly coastal program for NSM, our program is designed to be more inland business. We can get closer to the coast. We usually say like 15, 20 miles, in the tier 1 business. Mid-Atlantic and New England is a little bit different. We can get closer, because we don't have the, yearly threat of catastrophic hurricanes hitting the coast, but from that Texas to the North Carolina, Southern Virginia area, we generally want to be 15 miles or more inland, unless you have like, fire resistor or masonry non-combustible building. We might get a little closer to the water. We can always entertain those risks if you see them, but, our focus is on inland apartment, condo, multifamily business. Subsidized housing. This is a big topic, always. We can dabble in it a little bit, but we do break it down so that way we're not just pigeonholed into a flat percentage and the large scale, what is subsidized housing. So the big, sticker is usually the Section 8 type housing. We're going to look at that as 15% or less of the units out in any one location. So it doesn't matter how the breakout is per building, or if you have like multi locations on a policy. Think about it, on a per location aspect. Then the other big one is Section 42, 67, or another version of LIHTC type housing, which is low income housing tax credit. This stuff we can actually do up to 100%. A lot of it's actually really, really good business. I know a lot of it is around new construction or, real good rehab type business where, a lot of the buildings are, quickly rehabbed, they're brand spanking new, where they were just built, and they're taking advantage of, long-term tax credits, to help build these buildings so that, they can get those tenants in there. A lot of times the tenants, these aren't, the guys paying $300-400 a month, that goes into the other bucket. Sometimes these tenants are paying is just as much or high rents as a lot of other areas of the country. So you usually get really good tenants in there in a lot of these buildings. So we can entertain the 42 and 67 in LIHTC. While we're on that, the other one we don't really majorly go after unless it's LIHTC is subsidized senior housing. If there's any subsidized Section 8 senior, we typically stay away from it because this is not an appetite that us and our carrier want to go after. We also write mixed use business. So, if you get those apartment condos that have mercantile on the first floor, whether it's offices, we see a lot of, some with restaurants, convenience stores, delis, doctors' offices, those type of, not major hazard. I mean, usually pretty rare that you see a high hazard type, like a manufacturer or some other high hazard type GL exposure mixed with an apartment building or a condo. Usually it rarely doesn't exist much. And so, but we can look at those. So you get right around that 33%. I always say 33% because, you have that perfect rectangular square, 3-story building. The first floor is mercantile, the top floors are, residential. You're going to be right around 33% or so, give or take. So we're not going to split hairs on that, cut it off exactly dead on 30, but we like to say it's right around 30% or so, just for a conversation's sake. So we can look at those. We like them. We'll see that. Student housing is a big aspect for us. We will do it. We will do it up to 100% occupancy as well. Property all day long. We love it. If we're going to entertain the GL side of it, if it's predominantly student housing, we're going to exclude A and B because we don't want the exposure, of the students. Unfortunately, we all know through technology these days that, kids can't always make the smartest decisions. So we don't want to expose our book to, the liability of anything A and B related in today's world. So, if we can get the GL on those, we'll take them. If not, we understand as well. Senior housing, independent living, kind of goes into the other thing. If it's true independent living, so we don't want assisted living, we don't want nursing homes. You'll see that, on the next slide, but just, to hit it now, so we want the true, independent living. Everybody can kind of get around on their own. They have their own cooking, in the units. Some of them have, a small kitchen or so that, for the community, but we want these people to be ambulatory, and functioning on their own and not dependent. We don't want any pull cords, whether it's the old school version or some new electronic version, panic buttons, like that type of stuff that, in there. We want the true independence. Most of the business we're going to look at, is going to be in PC 1 through 7. You can see the caveat on the screen. If it's a little bit one of the older buildings, we're going to look at it as, PC 1 to 6. We're not looking to, again, write the really remote stuff. Either has, poor fire response. It could be, if it's out west, it could be exposed to the more wildfire regions. We're just, we're not looking to take on that 8, 9, and 10 stuff that, could lead to major issues. Next slide, Ryan. So what don't we write? So we kind of have a split right now, 1985 or newer, and then 1970 to 1984. So if you're looking in the 1970 to 1984 bucket, we're going to be looking to have the buildings have hardwired smoke detectors, or there's a new version that's wireless type smoke detectors that have a similar function. So that way, we have, protection in the building. If in 1985 or newer, we can work with more battery type stuff, or, they have, some of them already have, right out of the gate, all the bells and whistles with sprinklers, full fire protection, systems, all the bells and whistles. So it's nice. As I kind of mentioned a second ago, we're not looking to write any new business built prior to 1970 right now. It's not in our carrier's wheelhouse, with everything going on in the marketplace right now. We see a lot of frame construction. Just, that's what our program, it's historically typically written. So anything over 3 stories, so 4 stories or more, if it's frame, it's going to have to be sprinklered to be eligible for the program. Anything 3 stories or less is not required. And that's full sprinklers too. So sometimes you'll see some older buildings where they put it just down a hallway, or you get like a weird podium construction building where it might only be in the parking garage or something on the first floor, and they didn't bother to sprinkler the upper level floor. So for it to be eligible, for a taller building, it has to be 100% sprinklered throughout the building. I already talked about PCE classes. So boarding rooms, halfway houses, short-term rental type exposures. Got to watch, the big thing right now is converting motels to apartments. We want to make sure they're actually apartment buildings and not, like somebody just decided to buy the motel and, still running this kind of like, oh, I need to live somewhere for 3 months kind of deal, like those ones. So we're not looking to do any short-term rental type exposure, so we want full-time tenants that are signing 6-month annual leases, those types of exposures on a routine basis, when they move into the properties. Obviously, some after that become month to month. That's just typical apartment type exposures. We have done a few resort type condos, but we also want to make sure they're not in a really remote area. People need to live there, like that kind of stuff. But we do understand that, if they're in a more metropolitan area, that we can entertain them on a limited basis. Like I mentioned on the last side, we don't want to get into anything that has anything to do with skilled nursing, medical related, assisted type living. Joe mentioned early on, but I'll mention it again. We're not writing in Alaska, Florida, Hawaii, Louisiana. That's the entire state now, not just the southern part of it. If anybody on the call has been with us for a while. And we don't write in New York City as well. To be honest, all of Long Island from one end to the other, obviously part of it's New York City, but we typically just stay off the island completely, especially with some of our distance to coast, appetite. We just don't really want to be exposed with that sticking out. And while we're on the topic, we typically stay away from the Cape if you're up in the Massachusetts area, just because, again, how far it sticks out, it can be kind of, have issues when either a hurricane or a nor'easter or something like that rolls up the coast. Vacant buildings, we don't want them. I know we do entertain a lot of new construction, so we want to make sure the certificates of occupancy are there. We do have some, looser guidelines, for when new construction is rolling off a builder's risk and it's getting ready to be occupied. We can work with you on that. We want to, have an idea of, how many units are pre-leased, how many condos are pre-sold, and have a ramp up, so that we can get, closer to our desired occupancies within this, 6 months to a year. So that way, when we roll over in theory, do a renewal, everything is lining up to where we want it to be. Like I mentioned, timeshares, condo, hotel type mixed business. Typically we don't do it. Every once in a while we do, like I mentioned, come across one that looks like a good write, and we take a shot at it and see what we can do with it. For those of you maybe on the call that have been with us a really long time, we used to write hotel motel business back in the day. We haven't written it since pre-pandemic times, just because it wasn't, it was kind of becoming a loss leader for us, and we just saw the value in the apartment condo side a lot more. So we focus on that. We don't entertain any more hotel motel business. If you are looking at dwellings, we're not like a big single family dwelling schedule operation. We want multi-family dwellings, and we don't, because of the liability concerns and some of that, we don't want dwellings that have owners living in them. And again, the mercantile piece that lines up with what I talked about earlier. Moving on to the next slide, Ryan. Some of the key things that we do. Joe mentioned we have a very robust property enhancement endorsement. It's actually 20 enhancements built into the form. Some of them are giving back coverage that may be excluded. Others are enhancing a limit that's built into the regular property and coverage form. Some of the key ones that I usually talk to people about. There's accounts receivable coverage. There's money and securities coverage. There's employee dishonesty. There's some fine arts coverage. People have paintings and hanging in condos or apartment buildings. There's lost key coverage, which is key for a lot of apartment buildings and that stuff. There's outdoor property. There's some sign coverage built in there as well. There's one of the best ones that's in here is backup of sewer and drain coverage. We have the ability to tweak some of the limits that are built in here. They're not earth-shattering coverages, but they give the insured a little peace of mind, because they may not have the coverage at all, based on some of these, because with the way the exclusions are and some of the forms and language. So, and one of the other ones in there, if they need it, which we can do separately, which I'll talk about in a second, is ordinance and law. There is a little bit of throw-in coverage in the property enhancement. So if they're okay with lower limits, they don't have to purchase separate ordinance and law coverage.
Awesome.
Yeah. So obviously, we write building BPP. We also include business income. We do schedule a limit. We don't do it on ALS. So you'll see different variations out there in the market of how people cover their business income, but we always ask for a limit. So we try to, obviously ideally want that up front. If we see ALS or included, we may ask follow up with you, and request limits per building, like that kind of stuff. Equipment breakdown, it's standard equipment breakdown. It's full building limit. There are a couple minor sublimits built into it, but most of it is probably not apartment and condo related. There's spoilage in there and a couple other little things like that where, it doesn't really apply much to what we do from an apartment condo standpoint. Ordinance and law, we do offer full A. We can do B and C, either combined or a separate limit up to 10% of the building limit. Or we can do less as well. Like sometimes, your B and C covered 10% might equal $1 million. They're like, oh, I only want 250. I want 300. I want 500, 750, whatever it may be. We can also offer less than 10% as well if they don't want, the full limit on that. We do have the ability to offer ordinance and law coverage D as well. In there, I know that is a hot topic with a lot of lenders these days. So we gain the ability to be able to offer that. And then if you're looking at a GL coverage, along with us, we're also able to offer higher than non-owned coverage, along with our GL in there. So that's basically some of our appetite and key coverages. Again, if you have any questions that I didn't cover in any of this, try to shoot me us a question, and I'll see if we can cover it at the end.
Thanks, Todd. And hello, everyone. Thanks for joining today and spending this hour with us. As Joe mentioned at the beginning of the call, we're focused on building out an exclusive network of agents. So we're going to take a look at how HabPro partners with all of you to make that happen. So what is the HabPro difference? We have a dedicated team underwriter and underwriting assistant, as I think Joe had alluded to. So every agent gets assigned an underwriter and an assistant. So one of the four of us on the call today, or the three of us actually, are available for you. And if for some reason we're traveling or something, our assistants are always there to back us up. There's always somebody available to answer your questions or help you out with a last minute opportunity. All of us have years and years of industry expertise. I myself have been in the business over 20 years, and we know this business inside and out. And we offer competitive commissions to all of our agents. And as Joe alluded to, we are looking to partner with the agents that know this business, that have a dedicated department, because it is a unique business. It's more than just a wholesaler or a manufacturer. There's nuances to it that aren't always easy to understand. But at the same time, we are part of the NSM family, and we are always looking to help out the other programs agents. And if you have an account that is a habitational one, we want to make sure that we're able to help you find a solution for that account as well. So not only are we looking for the agents that know the business inside and out, but we want to be a team player for the overall organization. Next slide. And how do we win in a challenging environment? Things are changing rapidly. Premiums associated with cat treaties are going up, and that's had a ripple effect throughout the entire habitational space. Property rates are increasing all over the country. Carriers are pulling out of states, Florida, Louisiana. California is getting more and more difficult due to the continued wildfire exposures. And we underwrite that exposure. We're not looking to pull out of the state or not write business there. Texas has seen a big uptick in layered programs over the past couple of months, much more so than ever before. Carriers just aren't willing to take on the risks they were even 6 months ago. We don't have that approach to risk or to underwriting. When something fits our box, we will do the entire limit. In addition, deductibles are being pushed upward as carriers look for the insured to take on a greater portion of the risk. Here at HabPro, we offer an assortment of deductible options, particularly in the convective states. We can do a percentage deductible or a fixed dollar wind-hail deductible. It all depends on the circumstances. And our approach to the renewal book has been pretty consistent over the years. For instance, last year, we were looking for just a 12% increase. Some admitted markets shy away from urban areas, but as an E&S carrier, we realize that we need to be able to provide solutions for your clients that are located in the metropolitan areas. These are just some of the ways that HabPro is here to partner with you to help you write business and win opportunities. But, next slide. It's not enough just to hear it from us. I want to make sure that you understand how much our agents love working with us. So here's a couple quotes from some of our agents. Partnering with HabPro has been an incredibly valuable experience for our business. They are truly a valuable partner, and we look forward to continuing to work with them in the future. That's from Levi Borenstein at the Omni Agency. And the other one, HabPro has been our most consistent and one of our largest trading partners in the habitational real estate space. Their team is extremely responsive, and their ability to quote competitively with comprehensive terms is why our relationship has continued to grow immensely. That's from Megan Neff at Gallagher. Our service and our response is ultimately what helps us be so successful. And speaking of success, now I'm going to turn it over to Davis Howley, who's going to talk to you about some of our success stories. Davis?
Thank you, Reed. Hello, everyone. I'm Davis Howley. As Joe mentioned earlier, I run a team here on HabPro, and I'm going to share some stories, some instances of how we've been able to put this product into action and exercise some of the service standards that we've been talking about today. So the first example that I want to highlight is a recent one. It was an experience of mine where we had a newly appointed agent who, we had done our training, we had gone through the whole process of getting them on board. And, about a week into the relationship, they found out, with late notice that they were losing access to a program in certain states. And so what we were able to do is, we hopped on the phone, like many of us, some of my best relationships, we get a lot done over the phone and setting up some screening meetings. And what we did is, I got the call, we set up time, we screened 4 of these accounts that range between 5 and 15 million per location. And basically, we just got into the weeds. We processed those submissions. We reviewed those with the agent. We got them questions that we needed to get it across the finish line. And we were able to provide solutions for 4 separate insureds in a very short period of time. So, you saw that organizational chart earlier. We all have teams that we operate on. It allows us to work very quickly, dynamically, and be able to get closer to that negotiation stage, right? To actually get you guys terms and then have time to get back and forth so we can get to the right place. And one other thing I really want to highlight about this solution, or two things really, is, we've talked about our nationwide singular carrier access. It allows us to do a lot and to do it quickly, and it's easy for the insureds to digest. These are 4 separate states, completely different exposures, and we were able to provide ground up coverage in a matter of 2 days, right? This is not a shared and layered scenario. We were able to give a direct product very, very quickly. Whether you're an agent, wholesaler, we all know, we've all been there. It can take a lot of time to get responses on things. So it's something that we pride ourselves on. The next story I want to share is a little bit different. It was upstate New York, a condo association. And the TIV was nothing crazy. It was about 10 million, but the risk it had a significant water damage, shock loss, a freezing loss to some sprinkler systems. And then to couple with that, really what was kicking it out from all these other markets was some mild frequency issues that kind of stood in the background of those leading up to that larger one. And it scared a lot of markets away. But what we were able to do is work with this agent to get the underwriting information that we needed to get approval from our carrier, Arch, right? While it fell outside of our program guidelines, we were able to get the approval done and at a rate and deductible that was digestible and marketable. So again, ground up terms. We got the opportunity. We had a clear line of communication with the agent, and we turned it around very, very quickly. So we're really proud of the service here. We're really proud of the product. So it's going to be exciting. Obviously, some of you we already work with, and hopefully you feel the love. And if not, reach out. Let's fix that, right? But there's also a lot of you that we don't work with yet. And we're really excited to connect with you. So on that note, I'm going to pass it back to Joe Mossbrook to learn a little bit more about how we can get things started.
Awesome. Thank you, Davis. Success stories never get old. I love hearing them. And Todd, Reed, thank you so much for your presentations. Let's jump right into working together. So here's for you how to get appointed for the members on the call that aren't NSM HabPro appointed. Take a look at this. We have agents. We specialize on portfolio of apartments and condos. You heard that. We want to partner with committed agents to grow together. We want to expand with the specialists out there, the entrepreneurs, the ones that understand the meaning of the word underwriting due diligence and give you a full submission. So for how do you get appointed? Here's how you get appointed. Reach out. And just so we do have another guest employee on the call, Todd Busby. He's our lead distribution partner, and we are so fortunate to have him, all of his experience. So for the new agents out there and you want to get appointed, Todd's going to be right there in the middle of the process. He's going to be point. He's going to work with us to gauge and get all the information that we need to look for the onboarding of finding the best agents around the country. So reach out to us after this and learn more about how to get appointed. And Todd will certainly be the one running the show for there. So next, quickly, best practices for submissions. We talk about good, sound submissions coming in, completed, things that we need. But the most important thing is, where do you send them? Right here, habpro@nsminc.com. That's where the information that's listed here, loss runs, SOVs. We have a supplemental app. If you need it, we'll forward it to you. We really do get a full submission in with all the right information, and that's the quickest way to get it to the top of the pile and out the door. We don't look just to practice on quoting. We want to bind. So the more information you give us, the better chances we get to get into your targeted needs. So let's open up the Q&A. I know that there's a lot of questions out there. Some have already been formed and given to Todd. So Todd, let's jump right into it.
Before I jump in and start, I just want to throw it out there. If anybody else has any last minute questions, please throw them in the questions section of the webinar so that they can pop up on my list. And without further ado, I will get into the questions that we have. Do you view townhomes the same as condos? Basically, the answer is yes. They kind of all fall in that bucket where you have community property or community shell of the building with the unit owners involved with the individual units. So we kind of look at them one and the same. You do see some of the townhouse communities where, maybe somebody owns the entire thing and rents it out as like apartments. We can look at those as well too, and kind of consider them as more of like an apartment complex because there's a rental exposure with it as well. That's that question. On the condos too, unless it's an obscene amount of the units or we know about it, we do allow the individual unit owners to rent out their units, like that's kind of on their own. We just don't like when the association gets into the rental aspect of it, just because it opens up a whole other can of worms from a liability standpoint. Are restaurants allowed on the first floor? Absolutely. We'll do our due diligence on them, to see what's going on. For example, we will warrant that, they have, Ansel systems if they have cooking equipment and stuff like that, similar to, so that way we know they're properly protected if they cause a loss, or if a fire were to start in, in their kitchen or something like that, that they had, the proper protections in place to help mitigate any loss to the remainder portion of the building.
Hey, Todd, again, what's our maximum retail exposure, mixed use exposure?
Yeah, it's around 33%.
So if you have a 3-story building and the bottom floor is retail, that's good to go, right?
Absolutely.
You see a lot of that.
What's the maximum building and maximum TIV? This is an ever moving number. We don't actually technically have, TIV caps and per building caps. It's more focused around, what does it equal from a premium standpoint? As we mentioned, we do up to 100,000 in our authority. Anything over that, we would have to get approval from a carrier on, and we, it's scrutinized a little more. Because we want to make sure those bigger accounts are, what they're supposed to be. So it can really fluctuate. Depending on what state you're talking in and what your limits are and what the construction type is. So, I kind of usually say to send it in and let's see what it is and we can go from there. You have a schedule of locations and there's a mix of public protection classes. So anything that's over, 8, 9, or 10 or a 6 or a 7, I'm sorry, in that, 1970, 84 bucket, it will kick out that one location. If you want us to entertain any of the other locations on the schedule that do qualify, we can do that, but we can't accommodate something that doesn't meet the guidelines just because the rest of the schedule does.
Hey, Todd, how good is the referral process with the carrier? Are they quick to turn around business?
Absolutely. So obviously the more information that we provide them up front, it's easier to make a decision on. But, we can generally turn around something with them in 24 hours, give or take, depending on the level of information we can provide up front. So, we may work with you, the agent, to hit some of the hot buttons that we know that they always want answers on or information on, so to make sure we have the most complete referral possible to them, so they can just have the information in front of them, make a decision, and get back to us quickly. But they will ask, some supplemental questions sometimes that we may have to, get answers on for them before they can make a final decision. Unfortunately, anything built pre-1970, regardless if it was gut rehab, yesterday and looks brand spanking new, we go off the shell, the original shell construction of the building. So anything pre-1970, even if it was gut rehab, is not eligible. What property deductibles do you use? We target between 10 and 25,000 for most risks. We have the ability to offer up to 50,000, as an underwriting tool, or if you have, the insured is looking to mitigate risk on their end, or take on some of the responsibilities, should I say. So we have flexibility. If you have a really small risk, we can talk to our carrier about offering down to 5,000, but that's the minimum that we could ever entertain. But we're generally in the 10 to 25 range for most accounts. Let's see. Will everybody get a copy of this presentation or PowerPoint? Yes, everybody at the end will get an email with a link to the copy of this video as well as the PowerPoint information, so you don't have to scramble to do screenshots. When it comes to schedules of locations, it's ultimately up to the insured. If they have 10 locations and they want 10 separate policies for whatever reason, they had loss issues in the past and got burned by a carrier, non-renewing an entire policy, or they want to protect each one from each other, for similar reason. We can entertain that. We don't force you to schedule them all together. On that topic though, generally, we like to see schedules of less than 10 locations, just from a logistics standpoint. We can do more. Don't get me wrong. We won't always, it's not a hard no if there's more. But again, that's kind of like our sweet spot of 10 or less. It kind of fits, TIV profiles, it fits premium profiles, the amount of, documentation that we need to do, and just how everything lines up for what we typically like to see in our book of business. Is X-Wind a decline in coastal markets? No. It depends on where, though, because I would say that historically, and this could be ever changing after Ian and reinsurance changes, impacting coastal markets or just capacity in general. But we can do X-Wind along the coast. Even X-Wind, depending on the construction type, we still may want to stay about 1,000 feet or so away from the edge of the water, just because, we also don't want to be in an area that got heavily impacted by, say, a hurricane and there's nothing left of the town, right? So then you have months of possible buildings sitting there vacant, water damaged, while we may not pay the claim because it was wind driven, there's a whole slew of other issues that could lead to problems with the building coverage, after the fact. So we want to kind of protect ourselves from that as well. Let's see. Can you elaborate more on regarding dwellings, single family? So obviously, there's 1 family, 2 family, 3 family, 4 family dwellings. 2 to 4 is our ideal scenario. They can be a single location. We've seen almost like small neighborhood type exposures where an insured owns essentially the entire neighborhood of duplexes, triplexes, that type of thing. If it's more like an apartment type, exposure where it's obvious that it's apartments, it's a single location. They couldn't sell off one of the buildings. We may push them more into an apartment, classification than a dwelling. But, we've seen plenty of risk where the insured essentially owns the entire street, because they bought up every one at once, or as time went on, it almost looks like an apartment complex, but, that's what it is. Let's see.
We got about a minute, Todd. We got to really hustle here.
I'm trying. Anything with aluminum wiring or stab logs, Zinsco type breakers, they're all prohibited for us. It's something we don't entertain. Let's see. We right, expect condos with docks. It really depends on the value of the dock. If we can get the little ones, that are, a few thousand, we can work on it. I think we had one that came in recently with $300,000, very elaborate, huge, almost marina type dock. We're not trying to write that. What we're talking about.
It sounds like there's some questions we need to get back to. We want to value everybody's time.
There's a list of them. We know who submitted everyone. We have your name. Right. I know we're running out of time, as Joe mentioned, so we will get back to you on the list. If you did submit a question to try to answer your question. And with that, I'll turn it back to Joe for last comments.
Awesome. Thank you. Thank you for the presenters. Thank you for everybody that's on the call. We hope it was educational. We hope that you got the value out of this. We're here. We want to hear back from you. You need an appointment. You have the business in which we spoke. We'd love to talk to you. Again, Todd Busby, distribution lead, is with us. He'll be reaching out. Thank you very much for going through the HAB products. If you have a one-on-one question, you have our information. Let's do that. Hop on the call. You want an appointment, follow through with the information we provided. I just want to say to everybody, really enjoyable. Thank you so much for participating. and go Eagles.